Hello and welcome to the day ahead. It is Tuesday, July the 5th. I'm Andrew Gagan. Well, let's check the markets. Wall Street was closed for the US Independence Day holiday. Globally, though, stocks mostly rose, a bounce in oil and gas boosting energy stocks as concerns over supply far outweighed fears of recession. The DAX was mixed, finishing the European session marginally lower as German stocks attempted to stabilise. Global equities hitting 18-month lows last month on anxiety about rising inflation and interest rates. Checking in on some of the stock news, energy producer ExxonMobil is predicting margins to skyrocket, generating record quarterly profit amid high fuel and crude sales. Gasoline in the United States is close to a record at $5 a gallon. Looking at US futures, S&P 500 and Nasdaq futures are down. Soft data stateside suggesting downside risks ahead. Well, weakening economic growth, high inflation and the prospect of higher interest rates is further eroding investor confidence in the Eurozone, falling more than expected to negative 25.4. Producer price inflation for May came in at 36.3% year on year. And European Central Bank Council member Matthias Müller said, given the inflation outlook, it is appropriate to start raising interest rates in July by 25 basis points and continue with a further hike of 50 basis points in September. Major currencies were mixed against the US dollar, and ahead of the Reserve Bank policy decision this afternoon, the Aussie dollar is currently at 68.3 US cents. And Australian 3-year government bond yields rose to 3.18%, while the 10-year yield is up from 3.57 to 3.62%, with markets pricing the cash rate to be 45 basis points higher after today's meeting and to reach 3.15% by the end of the year. So the Australian share market is poised to open marginally lower as investors await the Reserve Bank's interest rate decision. In fact, SPI futures now in positive territory, but only marginally there. Global oil prices pushing higher again overnight on supply concerns there, with lower OPEC output, unrest in Libya and a strike in Norway, as well as sanctions against Russia outweighing fears of a global recession. Brent crude up around 2%. And the price of iron ore continues to tumble. Futures falling more than 4.5% to $109 a tonne, weighed down by a gloomy demand outlook in China, where many steel mills have cut production, with COVID restrictions and bad weather weakening demand. And the industrial metals meltdown shows no sign of abating, with the London Metals Exchange Index having recorded its sharpest quarterly fall since the global financial crisis. The copper price, often regarded as the barometer of the global economy, has fallen to a 17-month low. Spot gold was trading lower, near $1,809 an ounce. And Bitcoin is up, but is struggling to break above 20,000 US dollars. Well, all eyes will be on the Reserve Bank July meeting today, with markets expecting the central bank to raise rates by 50 basis points, with that decision at 2:30 Eastern this afternoon. And data on retail trade and new vehicle sales will also be released. That is your day ahead. We'll see you again tomorrow.